It's Welcome to the Resolution.
All right, welcome to The Resolution. This is our podcast here with tax concerns through Washington Tax Services. And today we wanted to talk a little bit about the history of IRS tax collection and where we are currently with what we as tax preparers and tax resolution companies see as how the IRS is pursuing people currently. Here with Jay. My name is Stuart.
Hi.
Jay, maybe we should start with the history a little bit.
I'm Jay Freeborne, licensed tax professional at Washington Tax Services. Our company has been in business for getting near 40 years, and so we've seen a lot of cycles of IRS collections and IRS's pursuit of non-filers. If I was to be a historian, say that we'll say the 1970s to 2016 was the period where the IRS really pursued any debt that was out there, regardless of the size, through their automated collection systems and through revenue officers. That was an era where the tax resolution industry came into existence to serve the public that wanted protection from levies. That was, kind of the whole cottage industry was born, representing people so they didn't to give them protections from aggressive collections like liens, wage garnishments, and bank accounts.
So is 2016 a change or an adjustment?
Yeah, and I'll get there, and we're almost there. But essentially, you would be levied if you owed. If you didn't file, you would be pursued, and the IRS would prepare returns for you. They're called substitute for returns. Good representation was beneficial because levies are very anxiety. It was a very stressful job. It's still a stressful job representing people, keeping people in compliance. But in 2016 and then later in 2021, after the pandemic, there's two big shifts there. One is private debt collectors were appointed by Congress to take the portfolio of some cases, particularly cases that were kind of dormant and old. And so that took some of the power from ACS. Now, we should note, private debt collectors don't levy. And you can ignore them. But anyway, in 2016, the IRS stopped, for the most part, going aggressively on small debts.
Now, focusing on the bigger fish?
Bigger fish, and then not focusing at all.
Or nothing. Okay.
Yes. And now that's not always true. I mean, there's the automated collection system still exists. It's just a lot of the resources there have gone to other places. That we're going to segue to, in this day and age, how do they get your attention?
So this is 21 forward, pandemic and beyond?
It was two stages.
Yeah.
In 2016, ACS stopped doing what they do, maybe late 16. And then 21, they took even another step to not aggressively pursue through some kind of aggressive correspondence. Now, there's exceptions to the rule. The revenue officers still take clients with big tax liabilities, companies with payroll tax liabilities, those are still pursued. Individuals are reminded that they owe money, but the actual levying of bank accounts or wages has been down dramatically in the last 7 years. Essentially, like our company, we've refocused to just like the IRS, to other avenues to assist clients, protect them from the IRS and reducing their tax liability, which brings us to now. The IRS still will revoke your passport if you owe money, $50,000 or more, and it's not being addressed. There's a lot of clients that have that problem to solve. Tax liens are still filed. They can mess you up, affect security clearances, and people still need to show that they filed their returns to get a loan on a house, apply for FAFSA for student loans, and you never know when collections will come back. And in our advertising to our customers, there's also just fear and guilt, and it rents space in your head. And a lot of people are motivated on that because they just want to get in compliance and do the right thing, and so they don't have to worry about it.
Yeah, I mean, I think a lot of times when someone calls in, we hear, "Am I going to go to jail?" I mean, it's a concern if someone thinks, "Oh, wow, I haven't filed in 5-6 years." They're going to knock on the door and come and get me.
Right, and IRS criminal still exists. So they still exist. It's just that era is over for now. Some say collections will come back with some of the resources that Congress gave them through the Inflation Reduction Act that was passed in 2022. But some say because of politics that they won't be doing it until 2024 after the election.
A lot of what we're seeing, it seems like, is people who have filed erroneously, and that's still a concern for people. Is that something you want to delve into a little bit?
I mean, filing the returns erroneously, well, I guess we'll segue to audits.
Yeah, I guess the
IRS,
is where I was hinting.
The IRS does audit people. The audit rate is dropped, but it still exists, just like collections still exists. Mm-hmm. It's just not in the higher percentages than there was. If you screw up your return, you'll get a paper audit or a correspondence audit through the Form CP 2000. We defend people in those, and people actually get selected for a real live audit with a human being if your return has red flags. Red flags like showing big losses, for example, or showing a lifestyle that isn't supported by the tax returns. But IRS exists. There's a culture of compliance in our country where people file their returns voluntarily. They're corporate, they're individual, but the IRS just doesn't enforce it like they used to. Mm-hmm. And there are penalties for late filing, and the IRS still will file returns for you if you don't file. It's just not as aggressive as before.
When it has been that CP 2000, it's somebody who has, we're in that gig economy world where people have that W-2 job and they file their return and they got some Uber stuff on the side, but they don't know how to or forget or don't realize that's also something that should be addressed. Again, it's not that there's an increase in that in the IRS's pursuit. It's almost like that change in how our economy runs feels like it's kind of stings people sometimes.
Yeah, well, 1099Ks are now a thing. If you are a business person and do business with a credit card or a merchant account, and you don't file a return, the IRS will take the 1099K and create a return for you. There's just a lot of incentives culturally and institutionally in this country to be tax compliant.
Yeah.
That hasn't changed. The banks are set up that way, the loans. That's the culture we're in. Our job here at Washington Tax is to get our client into the minimum tax compliance required. If they owe liability, come up with proactive and livable measures to resolve their tax liability, offering compromise, installment agreement, penalty waiver. There's still a lot of benefits to being tax compliant in this country. It's a requirement of being an adult, really. Most people need to borrow money at some point, and eventually the IRS will create some misery if you aren't compliant. But we're unlike other people that, the advertisements about the IRS come in knocking down your door, or some irresponsible media saying that IRS agents with guns will come visit you. It's just all overblown. We like to tell the truth here. That's the culture that we have at Washington Tax, and why we've been in business for almost 40 years, is we don't like to misinform clients. We also encourage people to get into full compliance or the minimum of compliance, so it doesn't wreck their family or emotional life. It does rent a lot of space in people's heads, and that's motivating.
You touched on it a little bit, and I go back a little bit. You said, everybody has to borrow money at some point. So one of those big points is you found a job that allows you to purchase a home. What is the minimum compliance there? We talked about minimum compliance before. I mean, there, I guess it's not the IRS is looking, but there's a lender involved.
Thanks. Good question. Lenders are very subjective. Generally, at the bare minimum, people are looking for the last 3 years filed, sometimes 6. They want to see proof of it. Occasionally, you'll see just one. I did see one lender that was satisfied with that. Naturally, if you just file one, which is risky, you better pay all the taxes due. And if you owe taxes after filing all the required returns of 6 years, is usually the max that you need to do. You should be in an installment agreement. But if you're in an installment agreement, you can still get lending.
And again, I think it kind of varies, but maybe correct me if I'm wrong. But when we say get those 3 or 6 or 1 in those odd cases in,
we would never recommend 1.
Yeah, yeah. But 3, 6, whatever it is the compliance in simply filing them, or is the lender going to be looking for them to be processed and paid if you have a liability with the IRS? I'm just, as somebody calls us and says, "Hey, I'm closing on a house right now."
Mm-hmm. I think the same rules of basic individual tax compliance apply. We have clients that haven't filed in a long time that are self-employed and know that they will owe taxes, or not self-employed and they know they will owe taxes. If you're not going to file 6 years and you're going to file 3, be prepared to pay all the taxes due. There's no payment plan unless you file all 6.
Yeah.
So that rule generally applies to people getting lending. Now, of course, if you owe too much to the IRS, you won't get a loan.
Then you've got another problem, I suppose.
Exactly.
Yeah. I mean, the other thought I think of, just if we want to move to another thought,
Sure.
Maybe one of the, we touched on it earlier there, is just change in marital status. Anything specific there we want to touch base on?
Well, I mean, if you're getting married, you don't want to marry somebody that isn't tax compliant, because
Why?
it will eventually come to you, particularly when you live in a community property state like Washington, California, Arizona, Louisiana, Wisconsin, and multiple others. When you marry somebody with a tax debt or tax compliance issue, then they could potentially pursue you for their debts.
Their debt becomes yours, as now you're a happily married couple.
And also, it's best to resolve your case before you get married, because your circumstances might be more positive to the solution.
Sure.
For example, how people marry a richer spouse than you, and that changes the resolution of your case. And you would have been better doing the resolution when you were poor.
That's a really useful point.
Yeah. Our focus is first compliance and then collections second. We're experts at collections, seen them all. It's just we have a less anxious clientele than we did 10 years ago. But they're still anxious. Nonetheless, you never know. This is how it looks 23, 24. The IRS might get aggressive in the future. You never know.
I think we've covered quite a bit today. WATAX.com is our website. Check it out. We have a blog on there where we kind of delve into further topics, this topic and others. Yep. 888-282-4697 is our phone number. Of course, on the website, you can always reach out. There's a contact us for, shoot us an email if you've got any worries or concerns about compliance issues. Jay, you have anything else for us?
Thanks, Stuart.
All right. Thanks, Jay. Appreciate it.